Hello and welcome to another system video. In this one, we'll look at the Parabolic SAR system. The Parabolic SAR system uses the Parabolic SAR indicator to determine the short-term momentum. The Parabolic SAR is typically used to determine where a stop-loss order should be placed. When using the Parabolic SAR system, SAR standing for stop and reverse, it assumes that the trader is fully invested in the market. In other words, you are either long or short and never flat. The Parabolic SAR indicator is a series of dots placed on the graph, either above or below the current price depending on the momentum of the market. A small dot placed below the price when the trend of an asset is upward, while a dot is placed above the price when it is downward. The accompanying DAX chart shows various places where trade signals are triggered. So for example, when you switch from the bottom to the top, that means you should be short of this market. And you can see that when we flipped around, it's time to get long, short, long, and short again. That is when the dots switch the sides of price. So from the bottom to the top, you're always going away from the dots. This is because when the dots flip sides, it tells you that the potential move is over. So for example, had you been long here, you would have touched the stop loss point, because that's what the stop and reverse tells us. Again, it tells us when to place your stop losses and where, what level, etc. You hit it there, and then it flips over. By allowing the calculation to determine your stop loss, it allows you to stay and capture as much of the move as possible without talking yourself out of the trade. It also allows you, it tells you which direction most of the momentum of the market is heading in, and therefore gets you on the right side of the trade. The indicator is typically used for short-term trading systems and quite often is used in conjunction with other systems. In other words, it's part of a trading system that quite often is used to enhance other systems or as a complement. As you can see, it's pretty straightforward. You just move your stop loss right along with the dots. As you start shorting, it gives you an idea of where to put your stop loss, and eventually you get knocked out and it turns you around in the other direction, staying with the overall momentum.